What is good, everyone? Welcome back to Nate Trades, and this is my weekly trading recap. I'm going to go over the 10 trades I took this week, the 2 wins, 3 break evens, and 5 losses, and how I full ported CPI effectively. So let's just get right into Monday. I learned a lot this week. I have a lot that I can grow from for next week. So let's get right into Monday. So Monday, going to the higher time frames, I was leaning bearish simply because we were respecting this 4-hour bearish. We had left previous day low here intact, and we had some really good draws lower. But if we were going to be bullish, I was looking for, you can see these two 1 hours right here. This is the 1 hour candle from 8 a.m. to 9 a.m., so it's a little ahead. But I was looking for these 1 hours to get respected if we were going to be bullish. But yeah, turns out we were bearish, and my plan for the day was just to be reactionary. If we just showed that we were going to be bearish, I was just going to be bearish. If we just showed we were going to be bullish, I was just going to be bullish. So very, very reactionary for the day. So going right into it, there was no trade setups for me to take a short here. At 9 a.m., we inversed the 1 hour fair value gaps that I showed earlier, and we were just overall just trending down. We had previous day low here intact right next to a 1 hour, and we had relative equal lows here. So getting right into the first trade setup. After moving down and displacing through Asia and London low, you can see this little bit of displacement through it shows we're not just reacting off of it. We retraced back up into a 5-minute that I've marked out here, and then and from here I was looking to take a simple continuation short. But as you can see, this is very premiumed. We're very, very far down. It's not very much of a discount. It's not a big retrace. So I was not super confident in it, I'll say. And the amount of candles it took to inverse this made me even less confident in it. But it was the strat, and I was confident we were going down. So I entered short. I got in a little bit late here with my break-even level right there. The reason I put my break-even level right there is it's the only level that could be my break-even, and because we were so premiumed, I thought by now there's a chance that we go up and tap this 15-minute, just do a resweep, because I've seen that happen before. It's happened to me. A resweep and then go, and that would be obviously a lot more discounted, a lot better of a retrace. So unfortunately, I entered here and then got wicked out break-even almost instantly. Next candle. And then we just chopped around and then did hit the draw of liquidity. So this one was a break-even trade for me. Very unfortunate. Very, very unfortunate. Now after this, after we hit this 4-hour below, we had an SMT with ES. ES being the stronger asset. We didn't hit the 4-hour, I believe. Yeah, 4 hours, that's all the way down here. So we had a pretty big external SMT, and so I was looking to maybe take a rebalance play. Now we inversed a 5-minute for value gap here, inverse this 5-minute, and it looked like the next draw of liquidity we'd be trending towards would be this 15-minute for value gap right here. So once we did that, we kind of just started chopping around. We didn't quite hit it just yet, and so since we had inversed this 5-minute and I thought that the draw of liquidity would be the 15-minute and we hadn't hit it yet, to me in my head I was like, we're still in a buy model, a very small time frame buy model. And so once we tapped into this 5-minute that was created, I was looking for a long. Now this one I did get break even onto in a second. This is exactly what I was looking for, exactly to the T. I entered long right here. My break even was at the high, which I'll talk about in a second, and then stop loss here at the low, and then I couldn't target just the 15-minute because that would be a negative RR. So I targeted just higher into it just for a 1-to-1. So right there, right on this candle, it very quickly boomed up and hit the break even level, and it very quickly came down and knocked me out break even, which I was obviously super disappointed with. And the lesson I took from this one, because obviously this looks very clean, and if I hadn't gone break even at that level, it would have won. So what I took from this is to put my break even at a more logical spot. The logical spot is not for it to reject off of this, because why would it reject off of this when we have small like LR right here, this high, this high, this high? Why would it reject off of this? That makes no sense. It makes sense for it to reject off the 15 minute. So if this scenario happens again, I'll put my break even at the 15 minute here, and that's a logical place that price could reject off of if it wants to go lower. Um, and so yeah, that was what I learned from Monday, and let's get right into Tuesday. All right, getting into Tuesday's price action. This was the trade that I took. I'll quickly explain it. So higher time frames, I was leaning bearish entering the day, but at 9 a.m. This was what it looked like entering the day. We were respecting this 4 hour, and there was a 1 hour here as well. At 9 a.m., we inversed this 4 hour, which then flipped my bias from leaning bearish to leaning bullish towards at least this 4 hour right here. And then as soon as we inversed it, we just started dumping. I didn't catch any continuation longs here because there was no 5 or 15 minute for value gaps. And then after we just disrespected EQ of this leg, it looked like we were just going down towards these lows. Now, what I messed up here and that I'll do better on next time is there's an SMT here at the low. ES cleanly swept like the last low here and then got a super V-shaped reaction. NQ didn't. Now, the reason I didn't look for a long right off of that, because obviously that sounds very clean, right? The reason I didn't take one is because, first of all, the highest time frame inversion in this leg, it was just a huge leg, so it would have been a 5 minute. And by the time this 5 minute inversed, it had already tapped the next 5 minute, which would have been my break-even level. Um, I didn't take a long there, and then also I was looking at the higher time frame, and it looked just generally bearish to me. It just looked generally bearish, and so I thought, maybe even though ES took out the last low, maybe NQ would still go down here, take out some of these lows, maybe tap this 1 hour here or this 15 minute for value gap here. So that was my thought process. So the highest time frame inversion after tapping this 5 minute right here was a 4 minute. I entered short here. My break even level was here. You can see my entry was kind of bad. It happened like on the next candle. It was a pretty quick candle here. I got in like on the wick or something. Break even here, TP here at the 15 minute that was inside the 1 hour, and then stop loss at the high. And immediately got boomed out. And then right after that, I was again looking for shorts because we had just tapped a new 15 minute for value gap that got created, and I saw this failure swing, which looked like just a better draw of liquidity now. And the highest time frame inversion in that leg, highest time frame for value gap that did get inversed right here, was a 3 minute. So this is what I took. I just targeted the New York AM low this time with a break-even level here and got stopped out again. Okay, so that was my entry on the 3 minute, and then got stopped out again. And after this day, I wasn't too mad. My emotions were pretty good throughout the day, but it was annoying. And the thing that I took away from this is just simply, it's so simple. Just don't target SMT lows. So simple. Just don't target SMT lows. So there's an SMT. ES took it out. NQ isn't required to take it out. And the V-shaped recovery on this was just A plus. So all the signs were there for taking a long and not a short, but yeah, that's the lesson I learned. I will not be taking trades if there's an SMT at the low. Cool. All right, getting into Wednesday. Wednesday was a terrible day for me. I crashed out. I'll talk about that in a little bit. But getting right to the higher time frames, entering the day, I was leaning bearish. NQ had swept out previous day high here, and ES had it. See it right there, swept it out. And then I was very conditional also this day. We had created a 4 hour and 1 hour 4 hour for value gap right here, and then it also lined up with a 1 hour as well. So entering the day, I was leaning bearish because of the SMT as well, but was very conditional with if we're just going to displace lower, I'll just be short. If we respect that 4 hour and 1 hour, I'll assume that the SMT doesn't matter, and I would be looking for longs. So we had a lot of good draws of liquidity lower. Here's an hourly for value gap that I was looking for, and then obviously previous day low would be the furthest one. So getting right into the trade setup that I took, after displacing lower and inversing the 4 hour and the 1 hour for value gaps, we left this semi-significant low. It's a pretty obvious low. It's not like an hourly fair value gap, like these relative equal lows below it or anything. But we did have that below as the external idea as well. So after moving down, we retraced into a 5-minute on ES, but not on NQ, so that's an SMT. And then we got a very good displacement candle out of it. The highest time frame here was a 2-minute. Clear break-even level here being New York AM low, and then that low-hanging fruit being that other low that I just showed. So this was the trade setup that I took, and unfortunately got stopped out right there. So that was the first trade I took. Probability loss. All right, so getting into the second trade I took here, we had an SMT on ES. ES made a higher high here and tapped a 15-minute fair value gap. And here on NQ, we made a lower high right here. And so again, I was looking to short. The draws of liquidity below are A+, and so I did. We got a clean 30-second inversion, which was the highest time frame in this leg right here. Took that with displacement, specifically with displacement, a 30-second IFVG with displacement. So this one was clean. Unfortunately, I got break-evened on this. I put my stop or my break-even in a very logical place. It looked like a more obvious low that we could maybe reject off of, and clearly we're just chopping around. So this one saved me by going break-even here because it did go up and eventually hit my stop loss level. But yeah, that was the second trade I took. Now let's get into the third trade I took. Okay, now the third trade I took was not exactly my model, which is half the reason I crashed out because I didn't stay disciplined and stick to my model. But I'll quickly explain why I took it. So it's called accumulation manipulation distribution, and that's the way I saw it for this trade. Usually I just trade liquidity sweeps or continuation models where we'll either sweep out a low and then I'll take an inversion for value gap to a draw of liquidity, or we're just trending towards a low and it retraces into a 5 or 15-minute for value gap, and then I'll take an IFEG that way. But this one did not sweep out this high. It did not sweep out this high. It actually created relative equal highs here. Now the reason I took it, and it did the same thing on ES. The reason I took this was, first of all, because I was emotional. Second of all, because I was still confident in this draw of liquidity. You can see all these stacked lows. They looked really good. And again, it was mainly just because I was emotional. I saw this as accumulation here. It was manipulating higher, and then it was going to distribute lower. That's how I saw it. But an easy way to see it is we were just chopping. So that's what I took. It was a clear like displacement here is how I saw it. And then unfortunately got literally just wicked out, and then it ran. And I was so pissed. I crashed out. I won't lie. I called my trading bro who took the same thing. And I just crashed out. It was the lowest I've been at in trading in probably 4 months. I was very frustrated with all the losses I've been taking because my model just hasn't been playing out here in December price action. And I crashed out. I didn't throw my phone, I didn't break my monitor, but I did the level below that, was just yelling. I was so mad. Anyways, that's what I did on Wednesday. Thursday was a lot better. Let's get into Thursday. Also, just before I go, I just want to say I only allowed myself to crash out for like a couple of minutes, and then I like locked in and I was like, all right, I'm locked in now. I gotta learn from this. I gotta be better. In reality, this is just one day in like the grand scheme of things. I had two trades lose when the draw of liquidity was perfect, and then one trade go break even, which is just unfortunate. So yes. All right, getting into Thursday. Thursday was CPI news day. I actually back tested 1 year of it the night before on how I was planning to full port CPI. My evals had gotten down to a very low drawdown, and so I back tested a strategy I'll quickly explain. Basically, with CPI, it's supposed to be a super high impact news event, right? The candle, you don't know if it's going to be bullish or bearish, so pretty much the strategy that I just back tested and that it seemed to work. I think it lost one time during the year. Was pretty much put a buy order 30 points above where the current price is trading and 30 points below or at like around a significant low, so like right here, even that's 47. Put a sell order right there and then put an like for this buy order, put a sell order up here, and then a sell order for the sell order, put a buy order down here for however many points I'm targeting. So I'll quick show a clip of that, and you can just see how I did it.
Okay. Put me in longs.
All right, getting into Thursday's price action. Onto the higher time frames. I was leaning bullish, extremely bullish. We had inversed a 4 hour right here, or we were about to. We were looking to do that. It was very much happening. Um, and we were just displacing higher. We were clearly displacing higher. The next obvious draw of liquidity was this fair value gap here, which is a 4 hour, a 1 hour, and there's a 15-minute right here. So very, very strong obvious draw of liquidity. So going to the day, I was extremely bullish. The obvious setup for me and my strategy was a simple tap of this 15-minute and then take a long here. That's what I was hoping for. Or being potentially just reactionary off of this level, see maybe if we catch a short towards a 5 or 15-minute fair value gap. So at market open, we moved up here. We didn't take out the high. We didn't take out anything significant. And then we retraced back into this 15-minute fair value gap. This was a pretty big leg, so I was hoping for a resweep here, which we did get, but I played it more safe today. If it wasn't December price action, I would have taken this. We had a nice move up and a clean resweep here, just very clean. It just swept out the low with a nice new leg, and it would have looked something like this here. Part of the reason I didn't take it, just targeted that. Part of the reason I didn't take it was just simply December price action. We had gone up and tapped a 5-minute right here, and so I wasn't 100% sure that we were gonna inverse the 5-minute. So I just wanted to be safer and more careful. If it wasn't December again, I would have taken this. This would have been my break even level, which looks so stupid, doesn't it? Like it literally would have wicked it and then break even me. So I actually probably would have put it like up here at maybe this level right here, this high right here, and then rolled from there. But that would have been the trade that I would have taken if it wasn't stupid December price action because December just hasn't been delivering for my strategy. So yeah, anyways, this is the trade that I took. It was a clean 5-minute. It gave me a really good RR on it. Clear break even level here with an A plus draw of liquidity. I was very confident in this one, so I took this and then unfortunately did get wicked out. The important thing to note here that I've noticed, and I'll talk about at the end of the video more, is I did get wicked out with my stop loss at the body low, and then it ran to TP. It didn't hit like if I put my stop loss at the wick. So that was the trade I took, super A plus. It was a very conservative entry with just taking the 5-minute inversion, and yeah. But unfortunately, just a probability loss on that one. But let's get right into Friday. All right, going into Friday and to the higher time frames, I was leaning bullish. We had relative equal highs above here. and this 4-hour intermediate high is a more external draw. And at 8:30, this fair value gap right here was looking very much like it was going to get inversed. It was somewhere up here. Along with that, we were respecting 1-hour bullish here, and so I was looking. Well, I guess we inversed it, but I was leaning very bullish with these relative equal highs here. So with all that, I was looking for a continuation long. There was the reason I wasn't looking for a liquidity sweep is because there were so many lows here that we could have longed off of that. You could say this one, but next to that one is this one, and then there is this one, and this one, and this one. December price action has just been trash. But going into this, I was looking for a continuation long off of a 5 or 15 and didn't get it. And then we boomed through here. At this point, I was just looking to be reactionary off of this level, see if maybe we're going towards the 4-hour intermediate high or not. All right, at 9 a.m. we got a data high here as a wick, so that gave me a clear close draw of liquidity, which is good. So I was looking for a continuation long using either a 5 here, which had already been tapped, or a 15-minute, which I was looking for. Now I was hoping for just like a deeper retrace, and so with ES, with ES, ES finally tapped the 5 and 15 here and then got a very good displacement candle. Now the reason I took this on ES, not NQ, was because NQ had hit the 5-minute and had hit the 15-minute, but ES hadn't. So I was hoping for like a deeper retrace, and so when ES finally provided that, that's when I entered. So we got a nice displacement candle here, which is exactly what I was looking for. Clear break even level here, and stop at the body low. Now I do feel like I was blessed by God with this trade because it ran straight to my stop loss area and then boomed up right after. And I put my TP. You might ask, Nate, why didn't you put it at the data high? Honestly, I wasn't super confident in it, which maybe should have told me that I shouldn't have taken this trade in general. I wasn't super confident in that, and I was just yeah, I was just not super confident in general with that. So I just put it at this 1-minute body high, which has no significance really. It was just right around 1 to 1. So that was pretty much what I did. I did win this one, and then it went straight down. So I do feel I was blessed by God with that trade, and yeah, it was simple. I think this time I used a lot of my market experience with NQ had hit the 5-minute, but it was super premium, so I was looking for a deeper retrace. And so if ES was going to go down and hit the 5-minute, NQ would also have had a much deeper retrace as well. So that was the trade I took on Friday. Let's get right into the lessons. All right, getting into the weekly lessons. I did full port CPI because my evals were a really low drawdown. And so, and for some reason, my A plus trade setups just weren't delivering like they would in June price action. Like, I'm pretty sure a lot of the trades I took this week would have hit TP in June, and they do in backtesting. So that's just something to note. I did have 3 trades that went to the TP level right after wicking out my stop loss, which I had put at the body low. And if I had put those trades at the wick low, that they would have hit TP. So that was unfortunate, and I think that'll be a more defensive way that I can trade next week, putting all my trades at the wick low instead of the body low with this December price action that's just not delivering as well as like June would. Um, for a weekly lesson that I learned, I need to put my break-even level at a more logical point rather than just an arbitrary level that my notes say and my strategy says. So I'm gonna do that. I'm gonna work on. I know it's specific for every trade, so I'm gonna work on that, and then I'm gonna just start being very defensive with my strategy, taking the safest, cleanest setups, because simply put, the stuff just hasn't been delivering very well for me. It's been creating failure swings, which is just relative equal lows, and it's just been weird. But what did I do right? I entered confidently overall. I didn't let my emotions control me while I was in any trades. Um, they did affect me after. And then I back tested and executed well on CPI, which was kind of fun, not gonna lie. What did I do wrong? I targeted SMT levels on Tuesday. Um, Need to be better about that, and I did get emotional and crashed out. What will I do next week? Since December price action's been stopping out my trades when the stop loss is at the body, not the wick, a more defensive approach is that I will be putting my stop loss at the wick next week. I probably won't be trading any of my fundeds for the rest of the year because there's not really any point to do that during December price action. If I do, it will be with very, very low risk, just so I can conserve capital for going into the new year. So that's it for this week, boys. Hope you learned something from my mistakes. If you took any of the same trades as me, drop that in the comments and subscribe to follow along with my journey. Peace out, boys.